Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we dig into the reasoning behind the moves today so we can better understand tomorrow. And today we're going to be taking a look at the S&P 500, one of our favorite markets, just due to its overall consistency. It's a relatively consistent market, and I think everybody likes a good amount of consistency when we're looking at these types of trades. Now, overall this morning is what I would call a gap back. We open up this morning after a huge rally in the overnight session, just causing a massive run higher. And when we open up, that shows in the form of a huge gap. Remember, we closed down here and we opened way up here. So we closed at 21.23 and a quarter and we opened up almost at 21.39. Okay, so very, very big gap higher here on the S&P. Now, notice what happened at the end of the day yesterday. We had a slight descending wedge working its way down, but they started finding a little bit of a bottom and some aggressive bullishness at the end of the day. So that aggressive bullishness tells us that even though they weren't in there for most of the morning, there are a lot of buyers in from the end of the day. And if they open up today with this gargantuan profit, they're not going to sit on it. They're going to take their profit, and that's likely going to cause a pullback. And that's where you get the initial drop lower. And that's also why there's an arrow right there, because knowing the context of the situation here, we know that buyers don't want to buy way up here unless they have a really good reason to. And that first candle of the day is not a good reason to. So they're going to wait for better pricing. Beautiful opportunity to sell the market back down. Again, if you waited, we pushed down and the market found a little bit of a shelf right here. The shelf then broke down, showing absolutely no bias for the bulls, and that allowed another opportunity to jump in and slam the market down. You're looking for the market to want to come back to support, whether it's the moving average, whether it's prior swing highs, whether it's a big support area like this, a supply and demand zone, etc. You're looking for it to pull back because that's where buyers want to get in. They don't want to buy up there, up at the highs. They want to buy when it's cheap, and it's not cheap until down here. Now, in the room, we were talking about a huge area of support coming in at 21.31. It went a little bit through it. It went about 2 points through it, but a beautiful bounce area for buyers to start steamrolling this thing right back up again. And it was really kind of a dead giveaway. Huge bear candle. Where's the follow through, right? Where'd the sellers go? If this was a continuation of a strong bear trend, where is everybody? Nobody showed up to the party. So they slammed down into a huge known area of support after breaching the level that we were talking about in the room and turned around with a bullish candle back in the opposite direction. That's a huge red flag for the sellers, and that allows the buyers to swarm in and slam the market higher. If you were waiting, you had another opportunity to jump in right there. And if you waited even more, now you have the sellers trapped in, and that fires right back against them into their stops, and another good reason to jump into the market. So just a beautiful bounce off of a huge area of support after a massive gap higher on that overnight session. And that formed our gap back morning, where we were able to push the market right back up again, and for a beautiful morning session on the S&P. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, and we'll see you next time.